folks, I give up. I give up. Throwing in the cards. This market's impossible to figure out in the short term here. Here's what we're looking at, okay? So we got the large, super large caps trading like penny stocks. You got Facebook going down 26% today. PayPal made a crazy move the previous day. You had Netflix make a massive move. You have the biggest companies in the world trading like they're penny stocks, making 20, 25, 30% moves. It's incredible. Amazon sells off way heavy into the earnings because people are scared out of their minds going into these earnings because they're like, oh my gosh, look what just happened to Facebook. Who's to say Amazon's not going to be down another 20% after hours, right? You had Pinterest going into this earnings down 10+% here today. Snapchat down 23% going into their earnings here today. People are scared, right? Scared. And everybody's looking at this Amazon earnings, right? Everybody's like waiting for Amazon earnings here, and then finally the Amazon earnings come out, and everybody's looking at this, right? And first thing we see is kind of operating cash flows decrease 30%. Free cash flow decreased to an outflow of $9.1 billion. So start going over some of the numbers. And what I saw at first was actually, I had the TV on, and I saw Amazon stock was moving crazy huge, up like 17%. So I'm like, oh man, Amazon must have reported great earnings. Wow, that's incredible. I was a little, worried about their earnings, but I guess they must have had, terrific numbers, right? They must have reported out of this world. And when it comes to Amazon, the eyes are always on their past revenue numbers and their guidance for revenue numbers. That's always the most important thing when it comes to Amazon. So based upon this move, they must have killed it last quarter, and their guidance must be insane because the stock's up 17+%. Well, what's the truth? Let's find out the truth, okay? So first off, no, they didn't kill it when it came to revenue. They actually slightly missed, and I mean slightly missed, only $200 million miss, which isn't a lot for Amazon, but it was a miss. So they didn't kill it. Wow, revenue actually technically missed. Okay, well, now I was thinking, okay, so they missed there, and then I was like, let me dig into this deeper. So I went to Amazon's investor relations page, and I'm like, let me find the guidance, because CNBC and everybody else didn't have it up yet at that time. And I was like, okay, I can understand if they missed on revenue for this past quarter, but guidance must be great, right? Guidance must be great. And then I looked at guidance, and I'm reading through this, and I find the financial guidance. You have to scroll way down for it. And the next thing you know, I'm looking at this, okay? Net sales are expected to be between $112 billion and $117 billion, or to grow between 3% and 8% in the first, compared to the first quarter of 2021? What? Okay, now I don't keep track of Amazon's earnings estimates off the top of my head. But what I can tell you is, as soon as I saw that, I was like, that's a colossal miss. And I mean a colossal miss. I know Amazon's usually a company that's expected to grow anywhere from, 10% on the low end to usually up to like 20% plus, right? So I know when I see a 3 to 8% expected growth, that's got to be a massive miss. So I go to the analyst tab, and I'm like, I got to see what's going on here. And sure enough, analysts have them growing 15% for this upcoming quarter. And Amazon just told us that they're actually going to grow between 3% and 8% in this upcoming quarter, which is a midpoint of maybe 5 to 6%, which is one of the most colossal misses we've seen. That's as bad, if not worse, than what Facebook just missed, right? And so here we are with Amazon, this situation, and you're looking at this one and you're like, wait a minute. They missed on revenue, and they just missed by 5.5 miles. I call it a mile for every $1 billion in guidance you miss. They missed by $5.5 billion compared to what the midpoint is Amazon just put out versus what analysts have for this company. And the stock is up 17% after hours. Oh, I give up. I give up trying to figure out this market in the short term. Oh my gosh, okay? Literally, if you would have told almost anybody, Amazon's going to come out and they're going to report that their next quarter guidance is going to miss by $5.5 billion on revenue, I think every single person who knows anything about stock market investing, anything, I don't care if it's a newbie or somebody that's been doing this for 35 years, okay? I don't care who it is. I think if you told anybody that, it would say Amazon stock will be down more after hours, probably another 5, 10, 15%, if not another 20% move down after hours. And the stock price is up 17%, okay? And here's the bad part with that, right? So now analysts are going to have to bring down their full year numbers of 22. Analysts had Amazon growing 17.3%. they're going to have to bring down that number to anywhere between, I would say, 7% and probably 11 to 12% now for revenue growth for 22, which means everything needs to be cut now for Amazon. Revenue growth expectations need to be cut. EPS expectations need to be cut. Gross margin, we'll see what happens with gross margin, if that needs to be cut or not. Every single thing needs to be cut for Amazon, but does that matter today? No, the stock's up 17%. And it just goes into this market of like, what the heck is going on in this market? It's absolute insanity, okay? Now look at Pinterest. This stock, first off, this is a $16 billion company, $16 billion market cap, and it's up 28.5% after hours. Like I said, guys, these large caps and even the mega caps are trading like penny stocks. And this is just tip of the iceberg. Wait till the next stock we get into, okay? So Pinterest makes this incredible move up. It hit a 52-week low today. And at some point, when it comes to these stocks, when they're hitting 52-week low after 52-week low and all-time low after all-time low, at some point, something has to give. And even if a company doesn't report the most exciting numbers in the world or something game-changing, their stocks are due to just absolutely go through the dang roof. And that's exactly what we saw with Amazon trading near 52-week low. And actually, some of the lowest ranges it has in 2 years, Amazon stock was. And they report awful guidance and the stock's up 17%. Pinterest here, okay, but you would think this was the best quarter in the history of mankind, up 28.5% after hours. But when you're getting this devastated and you're getting pushed down to these levels, right? It doesn't take much to just get people to flood into this, okay? This next stock, oh my gosh, okay? Wait till you see this next move. It's hard to even wrap your head around a move like this, okay? Snap is up over 50% after hours. Guys, this is a $40 billion market cap. A $40 billion market cap, and this stock is up over 50% after hours after being down 23% during the trading day today on literally no news other than the Facebook earnings, right? This is like, if you want to talk about max volatility in the market right now, I've never, ever, in my 14 years of doing this, and I've seen multiple stock market crashes, I've seen multiple corrections, I've seen multiple scary markets. I've never seen the market this crazy volatile in my time of doing this, okay? This is epic. I've never seen $40 billion market caps move 50+% on earnings and 23% prior to that earnings coming out. This is new to me, okay? And this is new to anybody that's been in the market, because this is not the type of stuff you usually see. This stock was just at a 52-week low literally here today. And it makes this, a 50% plus move. Like I said, these stocks are trading like penny stocks right now. It's nothing short of, I know everybody makes fun of me for using this term too often. Nothing short of extraordinary. This is nothing short of extraordinary, okay? $40 billion market cap moves 50+% after hours. It's just, oh my gosh. Talking about frying your brain, this market right now, okay? Now, here we go. So basically what's about to happen over the next few weeks, a lot of my stocks are going to be reporting earnings, okay? And a lot of my stocks are smaller cap companies. I don't know what to expect with this. I guess these stocks are going to move 30, 40, 50, 60%. If a $40 billion Snapchat's moving 50%, I don't even know what to expect for my stocks to move, okay? Tattooed Chef, I don't know. I guess after earnings, that stock's either going to be $7 or $17 based upon the pricing action we're seeing in these stocks. It's insanity. Insanity. Literally, if this is happening with companies like Snapchat, if Facebook's moving 26+%, what's the Chef going to move a $1 billion market cap? Or actually, technically, it's under a $1 billion market cap right now. What's that baby going to move on earnings, man? Oh my gosh, okay, Corsair Gaming, right? Corsair Gaming has been devastated, right close to a 52-week low. Tattoo Chef's right around an all-time low, very close to it. Corsair Gaming, maybe they miss earnings and maybe the stock goes up 17% after hours. Like, we don't know. Like that's how insane this is right now. I don't know what to expect with Corsair. I guess it might be $14 after earnings, or it might be $26 after earnings. It's like I said, if these mega caps are moving like this, what the heck should we expect from the small caps, right? Hey, you know what the last thing to really fry our brains would be is if the small caps all hardly move. Imagine the Chef moves like 3 or 5% after earnings, up or down, right? Imagine Corsair does like a 3 or 5% move. That would be just the final straw just to make our brains go, okay, like that emoji, Apple has. It's like, that would be the last straw to make our brains fry, essentially, where it's like, oh, really? Yeah, Facebook's moving 26%. Snapchat, $40 billion market cap's moving, 50+%, and then small caps move all 3 to 5% or something like that. Palantir, what should we expect from Palantir? I mean, this is a stock near its all-time low, near its 52-week low. What is this stock going to do? Make a 50% move, a 60% move, a 70% move? Like, when you think about these type of stocks, that these ones are much more volatile than the ones we've talked about in this video. And, what should we expect from moves from these stocks, guys? It's extraordinary. I'm thinking about a few other stocks that are going to be epic, right? Square stock should be reporting earnings in a few weeks from now. Square, okay? This stock's at a 52-week low. It's been devastated. It's down, 60% or so from its all-time high. And this is a stock that, look what just happened to PayPal, right? Look what just happened to PayPal. Does Square, face that same fate? But also, do remember, Square has been pricing down this whole time, right? So Square's been pricing down. So it's kind of, in terms of Square, people are already expecting kind of the worst in that situation, right? Because of what happened with the PayPal numbers, and PayPal owns PayPal and Venmo. And so with Square, maybe that's a stock that ends up being up 20, 30, 40% after earnings, because everybody's priced in the bad news and you got all the sellers out, and it ends up making a huge upward move, even if the earnings aren't great, which is a possibility, right? The good thing for Square is their expectations are very, very low. But gosh, if you want to expect some volatility, watch that baby after earnings. Beyond Meat, we know this is a super volatile stock. We know the deals with KFC, McDonald's going on. Wait till their earnings come out. You want to talk about a mover, for their next earnings, whenever that comes out. Oh my gosh, get ready to hear a mover, because they're going to have commentary about the McDonald's deal, the KFC deal, and all that stuff. Oh my gosh, okay, that's going to be a show to watch. Stitch Fix, this is one of the more volatile stocks you can watch in the market. Look at its 52-week high, look at its 52-week low. This 52-week high in the stock's, I think, $100-something a share. It's 14 here today. This is a stock that routinely makes a 20% plus move on earnings. So if this one moves a 50% plus after hours for their earnings, don't be shocked, okay? If Snapchat can make that move, I can tell you Stitch Fix is a much more volatile company I've seen over time than Snapchat, which Snapchat's usually a pretty volatile company. This is at like a next level. Wait to see that one, man. Wait to see that one. Honest, look at how small the Honest market cap now is, because it's gone down so much. I mean, Honest is trading at a market cap now of probably $600 million, maybe even below $600 million. With those Honest earnings, don't be surprised if that one ends up moving 20, 30, 40%. And that's not even a stock that you should expect a huge move in. Honest sells, beauty products. They sell diapers. They sell wipes. They sell soaps and shampoos and stuff. Like, you shouldn't expect that stock to move massively, but don't be surprised if that one moves 20, 30, 40% on earnings, because that's the sort of market we're in right now, guys. This is a max volatility market we are in. Epic market, okay? And as a great poet, Young Boy Never Broke Again, once said, he said, it make no sense. And, I agree. This market makes no sense right now. We're having I don't even know how to explain this sort of volatility. When you have mega caps trading like penny stocks, when you have a $40 billion company making a 50% plus move after hours, I don't even know how to describe that market. This is the furthest thing from a normal market we are in right now. I can tell you that. There's a lot wrong with this market. And I mean a lot wrong with this market. Small caps are trading way too down. They're trading unsustainably low right now. Mid caps are trading unsustainably low right now. That should not be that way. Those are huge issues in the market. You got Facebook and Amazon trading like they're penny stocks. That's not normal activity. This market is messed up right now. And I mean really messed up. And how all this shakes out, we're going to have to see. $1 trillion plus a day being bought in puts, that is going to mess this market up even worse. It's going to make us even more volatile. When you got the put volume's gone insane recently. $1 trillion plus a day. The amount of option activity going on in this market, because everything's so volatile, so people are like, oh, let me get in, let me get out, let me try to play this earnings trade, things like that. Let me swing this for the next month on this option activity and things like that, right? When you have that going on, this is just going to create a more volatile situation. And then you have the time periods here where people are flooding to cash, going all cash, going part cash. Those folks are going to come in, they're going to enter the market, they're going to exit the market, they're going to enter a position, they're going to exit a position, which causes even immensely more volatility in this market. And this creates, like I said, this is one of the most volatile markets I've ever seen. The VIX isn't really showing the truth behind this market right now, in my opinion. The VIX is not, because the VIX isn't just accounting for the fact that Snapchat just moved over 50% after hours. The VIX isn't really accounting for the fact that, Facebook just had its worst day in the history of that stock, right? And it's trading near values that it traded prior to Roni Rona. The VIX isn't really accounting for the fact that Amazon just went down 7% and then up 17% when they just missed revenue and they missed guidance by 5.5 miles. The VIX isn't accounting for that, right? And so I think this to me, I know there's been time periods in my past 14 years where VIX has been way higher than it is right now. But for me, looking at this market objectively, this is the most volatile stock market I've ever seen, okay? And what I will say in a volatile market is you get some incredible opportunities to buy some stocks at some disgustingly cheap valuations. And, that's usually a good thing. When you can get stocks at 52-week lows, all-time lows, left and right, that actually have great underlying business models, that's the key. That have actually great underlying business models that have great futures for the next, 4, 5, 6 years in front of themselves. That's the sort of opportunities you get, and don't waste these sorts of opportunities. If you need to know exactly how to research stocks, everything to look for and things like that, we got a massive Valentine's Day sale coming for the private stock group, the Financial Fortress program. That will be, it's only a week and a half away or so. So check out pinned comment to sign up for the wait list for that. Make sure to subscribe to the channel. More coming. Much love, and have a great day.